What do you mean by securities transaction tax?
Securities transaction tax was a new tax that was introduced in 2004 because it was in 2004 that the government decided to make capital gains on equity, long-term capital gains on equity, tax-free. So, securities transaction tax began to apply as something that the government will recover every time there was a purchase or sale transaction in equity as well as in derivatives.
So, when does a mutual fund actually pay STT?
Every time there is a purchase on the stock exchange or there is a sale of securities on the stock exchange, the mutual fund pays this tax. But for the investor, all these transaction costs, that is the broker's commission and the STT and all the costs incurred with constructing and managing the portfolio is already embedded. So, it is not something that directly comes and affects the investor. But yes, if a fund is doing too many transactions, what we call as turnover, if there is too much of activity, then there might be an impact of STT if the rate is very high.
So, does an investor actually pay STT?
The investor will pay an STT only if there is a transaction directly on the stock exchange. But a mutual fund investor is unlikely to pay an STT for every transaction because the fund is already paying it. However, when there is a redemption transaction, STT will be recovered because a redemption transaction from the investor may actually trigger a sale transaction by the fund manager on the stock exchange. So, there might be a specific requirement to recover this STT from the investor. So, when there is a redemption transaction in an equity oriented fund, STT is deducted from the investor.
So, if I actually put in a redemption, I get a lower amount because of STT. How does one manage that?
When the investor makes a redemption, there are two ways in which this happens. The investor can redeem units. For example, in the redemption request, you can say redeem 500 units or you can say redeem 50,000 rupees. The way STT will be accounted will be a little different in both these cases. If your redemption is in units, then that number of units will be redeemed. STT will be paid to the government and the balance amount will be paid to the investor. On the other hand, if you wanted an amount, so you are clearly telling the fund that this is the amount I want to receive as my redemption proceeds. So, if your redemption request is for an amount, what the fund would do is add the STT to this amount, get the gross amount and redeem units for this total. And of the total redemption that has been made, STT will be paid and the balance amount, which is what you requested, will come to you. So, as a rule, what you have to do is, if you need a specific amount, it is better to state that as an amount. And if you are going to state your redemption in units, be prepared for STT to be deducted before the payment is made to you.
Is STT applicable on exchange traded funds?
As we said earlier, STT is applicable the moment you are transacting on the stock exchange. This means listed mutual fund units and exchange traded funds which are transacted on the exchange. Both of these, the transactions, the purchase as well as sale, will be subjected to securities transaction tax.